A $37 trillion debt mountain looms. Tariffs target BRICS and beyond. Global trade braces for shockwaves. America's debt crisis threatens the world economy. Hello and welcome to Explained by NewsX. Today, we dive into a financial storm brewing at the heart of the global economy, the US debt crisis. As of July 2025, it is now exceeding a staggering $37 trillion. That's more than the combined GDP of China, Germany, and Japan. US President Donald Trump in his second term is wielding tariffs as a weapon to tackle this crisis, targeting BRICS nations and trading partners worldwide. But will this bold strategy save America's finances or ignite a global economic firestorm? In this episode, we dissect the US debt crisis, Trump's tariff play, and its far-reaching implications through 6 compelling case studies that reveal the high stakes of this economic gamble. Now imagine saving $1 million a day for 100,000 years. That's the scale of America's $37 trillion debt. Relative to the United States' $25 trillion economy, the debt-to-GDP ratio is now at 148%. This signals a crisis decades in the making. From tax cuts to pandemic spending, the debt has soared, with Trump's recent $3 trillion budget bill slammed by Elon Musk as a disgusting abomination, adding fuel to the fire. The US debt crisis did not emerge overnight. Persistent budget deficits, tax cuts under multiple administrations, and crises like the 2008 financial meltdown as well as the COVID-19 pandemic have driven debt skywards. The US benefits from issuing the world's reserve currency, borrowing at low rates, but this privilege is fragile. Compared to Japan's 250% debt-to-GDP ratio or Italy's 150%, the US isn't the worst offender. Yet, rising interest rates and waning foreign demands for US bonds threaten to squeeze finances, crowding out investment and risking a debt spiral. So is this a ticking time bomb? Now enter Trump's tariff strategy, a bold bid to tackle the debt. Under Trump's second-term policy shift by July 2025, tariffs reportedly jumped to 18.2% on key imports, covering $2.3 trillion in imports, or 71% of US's total trade globally. Now, in this regard, the Penn-Wharton model predicts $2.4 trillion in revenue over a decade, potentially slashing debt by 7.3% by 2030. Trump says the tariffs will revive US manufacturing, pointing to the Philippines, where lower tariffs spurred investment. But critics warn of an economic fallout. So will this gamble pay off, or is it a high-risk bet? Meanwhile, Trump's tariffs zero in on the BRICS: Brazil, Russia, India, China, and South Africa, as well as new members like Egypt and Iran. He threatens 100% tariffs on any BRICS nation pursuing a non-dollar currency, which echoes his 2018 to 2020 tariff wars with China, but on a broader scale, and now tariffs on their allies, calling BRICS anti-American. Brazil faces 50% tariffs, Russia 100%, and others like Mexico and Canada see 30 to 35% tariffs. BRICS, with over a third of the global GDP, is de-risking their economies through diversifying their trade basket, as seen in the 2024 Kazan and 2025 Rio summits. And Trump's response? BRICS is dead, is what he claims. But can tariffs stop this global shift, or will they backfire? Trump's tariffs are not going unanswered. Brazil's President Lula rejected Trump's emperor tone, while South Africa slammed tariffs for crippling trade benefits. Colombia's 25% retaliatory tariffs cut US exports, like Nigeria's $527 million drop in 2025. The American Tax Foundation warns of a 0.8% GDP drop and 1.3% household income loss in 2026, with middle-income families facing $1,270 to $1,619 of a tax hike. JP Morgan has flagged inflation risks as 49% of tariff costs hit US consumers. So the bigger question remains that are trade wars worth the price? Trump's tariffs aim to protect the dollar's global reserve status, but they may accelerate its decline. BRICS leaders like Lula advocate trading in local currencies, and Russia seeks swift alternatives as well. Economists are warning that forcing dollar use could erode its global appeal, framing it as a US demand rather than a shared benefit. The trend is clear. Nations want options. So will tariffs strengthen the dollar or push allies away? Trump's tariffs offer revenue and leverage, potentially cutting debt and boosting US's industries. But it risks inflation, trade wars, and de-dollarisation, all of these that loom large. Structural reforms like tackling entitlement spending are essential but politically tough. BRICS diversity, India as a US ally, Iran as a foe, calls for diplomacy, not just tariffs. So can Trump balance or force with finesse? The world watches as America navigates this economic tightrope. Will these tariffs reshape global trade in America's favor, or will they spark a backlash that rewrites the rules of the global economy? Debt, trade, and diplomacy are colliding on a global scale. Trump's tariffs gamble may rewrite the economic rulebook, but will it save the system or crash it? As the future remains uncertain, one thing is clear: the stakes could not be higher. That's all for now. Stay tuned for more on NewsX.